Good morning. It's Tuesday, March the 4th, 2025. I'm Zack Howard. Here is your 3-minute morning market update. Lots of headlines out there in financial world, tariffs, etc. here today, but I got 4 things I want to cover in my notebook. FX currencies, yields, US equity, and my favorite topic, gold. So in FX land, we got a stronger euro here on a Tuesday, the strongest it's been in 2025, alongside a strengthening Japanese yen, which is often seen in risk-off markets that yen usually strengthens. Those two currencies are leading to a weaker US dollar DXY here. So DXY is the US dollar index. It is now in a bearish trend, floating around this 105, 106 level. Mexico, Canada, China tariffs official overnight here, putting more pressure in that FX space. Continued volatility expected there. We had the Bank of Canada meeting next Wednesday, and all systems go for a rate cut. The question is 25 basis points, possibly 50 here in this backdrop of a slowing economy. All of a sudden, the Canada bond 5-year yield is down to 250 basis points, pointing to continued easing ahead for that Canadian policy decision next week, which leads us to the yields in the US. Big lower lows, big lower highs in that US 10-year yield. It continues to fall down about 25 basis points in the last month, continuing to price in possible rate cuts ahead for the Fed sooner than expected. We have yield curve inversion in the 3-month, and the 10-year yield in the US now at negative 16 basis points. Cue that Will Ferrell meme of, whoa, that escalated quickly. So what we're seeing here with that volatility in the VIX rising here above 24 today, that would open up the window for continued selling in US equity indexes that have been under pressure. Volatility is the throttle of risk. We have the US indexes, the IWM small cap, the QQQ's NASDAQ, and the SPY, the S&P 500, all in bearish trend, all showing lower lows, lower highs in the backdrop of that bearish trend and accelerating volatility. That is a cautionary state to be in, and that's where we're to. The tech names and those Mag 7 big high flyer players all continue to be under pressure in that volatility regime. We have all those names continue to have bearish trends, except for Meta and Apple teetering towards bearish trend. A VIX breakout, like I say today, about 24 would open up the window for more selling in those areas, along with the higher beta names, which leads us to ending off on gold. The inverse of risk, that low beta asset that has much more currency-like volatility characteristics than equities. Gold's volatility went out yesterday, measured through the GVZ ticker at 16.81. The opposite of what we're seeing here in NASDAQ, Russell, Bitcoin, and some of the higher beta plays. Gold is kind of doing its thing, which it does in this backdrop of slowing growth, slowing inflation, which the market continues to price in, with bond yields falling, currency like oil, commodities falling as well, really saying to the market, growth is slowing, you need to reprice what you had on the books for expectations into Q2, and which leads us to end here today. Risk happens slowly, all at once. Be careful out there and keep an eye on the volatility readings. We'll see you tomorrow.